Hey guys, welcome back to another weekly fundamental analysis. I have forgotten to record last week, so we'll briefly go through last week's data and then I'll go through this week's data. I am in a trade for gold and we'll talk about that. So, last week's data, 5th of August to the 11th of August. COT report wise, we had um, some bearish change to Aussie, pound, and euro. Yen is back and stabilizing to the long side, so it's no longer super bearish. It's actually starting to get, the bulls are picking up. We have bullish for the indices, bullish for silver. In terms of data, we had PMI data for services, which was slightly higher than expected, but we had a neutral reading, so no real change in terms of fundamentals. However, we will dissect just every one. We had final services PMI, which was cooler than expected. I don't really remember this because this was 2 weeks ago, but written down, there was marked expansion of business activity in July on the back of rise in new orders. This person here states PMI service brings encouraging news of welcome combination of solid growth plus cooler selling price inflation. The biggest one was ISM services, which again you can see that was a neutral reading, completely opposite of last week's jobs data. Yeah, so the ISM services this week was sort of suggesting that at least from a PMI standpoint, that the economy is actually growing, adding jobs, inflation above target does not fit the impending recession narrative that was last week on NFP date. And then in terms of the Aussie, we had cash rates and RBA statements. Inflation still too high. Inflation forecast returned to its target in late 2025 and approached midpoint in 2026. So rate cuts not likely for Aussie. So that's next week's data. In terms of what I wrote down for last week, I said that there's a very strong bullish bias for gold. That was due to the previous week of NFP. However, this week's PMI data actually suggests opposite of that. Economic activity in the US doing well, as if we go based purely on the services PMI data. However, yeah, just noting down, manufacturing PMI data is actually the opposite. So I still was bullish on gold. And then we had slight bearish bias for oil due to poor economic readings such as manufacturing PMI as well as jobs data. And then we had no significant news for oil. So that was from the 11th to the 5th. And I actually entered a trade then, which I didn't report to you guys because I didn't take that into consideration, but I did take a trade on the 7th of August off of this. Pretty much, yeah, got an entry there. Saw this rejection wick. I liked the daily at the time, so it would have been if we go on the 4-hour and we just pop it here, I would have saw this sort of doji price stabilizing in terms of from a daily point of view. Very nice support area it's rejected off. So I just got in, and you can see now that's where price is. My stop loss is still under here. I will be moving my stop loss to this region here. Right, I'll be moving my stop loss under here. I might pop it here. Yeah, I'll pop it, let's say here. I'll move this stop loss here. I am going to look for another entry. Let's pop an alert here. Right there, so it's actually broken up. You can see if we look at the daily, it's broken up this resistance here. So now we're hoping this turns into support, and we are wanting this to come back and shoot up again. So if that does happen, I will get in a position here. Stop loss will be under this low here, and yeah, I'll look to enter another long trade and add to my position in gold. So that's the current trade right now for gold. bit sidetracked, let's go through the fundamentals for this week. COT data, we had bearish change on pound, we had bullish. You can see the yen right now is actually more favored to the bull side, which is, the yen stabilizing essentially. We had very bearish on all the indices. However, I am actually still net bullish on the indices, and I'll show you guys why. Oil's actually bullish, but I'm net bearish on this, so we'll go through this in a bit more detail. For data wise, we had CPI, PPI, and retail sales for USD. CPI was cooler for year to year. PPI was cooler as well, so inflation data is cooling. And we had an increase in retail sales from forecasted 0.4 to 1%, which is very, very big. It means, inflation coming down, spending increasing. Overall, very good for the high. Overall, good picture for rate cuts right now. So this week's data, we had Aussie wage price index, lower than expected wages for Aussies. We had pound claimant and average earnings, very bearish. So we had claimant count increase almost tenfold, meaning more unemployment. And we had average earnings lower by 0.1% from forecasted, and almost 1.2% lower than last reading. So very bearish for pound. In terms of USD, we see lower than expected, cooler than expected PPI, cooler than expected CPI numbers, inflation coming down. Aussie employment data, we still have unemployment rates higher than expected. Even though we had a bullish, a hotter than expected reading for employment change, unemployment rate still is an issue, which is net negative for the Aussie, especially in combination with the wage price index. USD retail sales, unemployment's all hotter than expected, all better for the US economy. So we had, positive news for USD this week, and we see the inflation data coming down, whilst retail sales remain better than expected, which suggests rate cuts, even more likely for September, and not to 50 points, but actually to 25 points, which is what we want. We don't want a drastic rate cut. We want a slow, steady rate cut, so the swings aren't as prevalent, essentially. All these other ones I didn't really delve into too much for this week. But let's have a look. PPI, we can see the reading for PPI is, it's coming down in the last year or so, coming down, right? So it was higher, forecasted in, this would have been around March region, slightly higher, and then now it's getting lower and lower. So just overall narrative is inflation is coming down from PPI data. CPI as well, you can see year to year coming down. The last month to month, it was forecasted lower than expected for the last 3 months. So inflation coming down, unemployment rates for Aussie going up. So Aussie really looking for a rate cut, is more than, it's coming for sure, just because of the unemployment rate. Retail sales as well, we can see it's higher than expected. Not too much to comment on retail sales. It was a good reading though this week. Next week data, we have flash manufacturing and services PMI. We have Powell, which is going to be key, and I'm just keen to see the pound as well. Governor Bailey speaking. So take home, quite significant few weeks for the USD. So initially on the week of NFP, we were expecting 50 basis point rate cuts for September, and then last week we had good services PMI data. Now this week we even have better news for spending, and we can see that inflation is cooling. So that 50 basis rate cut is unlikely now. It can still happen, but unlikely. We're probably heading towards a 25 point rate cut, which is good. It's stable. As a result, gold's still bullish, considering when we get rate cuts, it's a bullish signal for gold. Not as much uncertainty anymore, so it may reverse and take me out. Oil, consumer spending increased, however, lower inflation numbers, oil and inflation numbers being sort of key hand to hand. So, potentially shorts for oil, but I will just monitor it. I won't place a trade. It'll be forward testing for oil just to, get the rhythm in. Um, but just yeah, it's not strong enough bias for me to take a trade. Again, also forward testing US 30 to the long side due to increased spending and lower inflation numbers being good for indices. Rate cuts are better for indices as well as more spending is done. So, my gold, as explained, another trade will be taken here if it reaches there. Regarding oil on the daily, you can see trending down. Actually, quite a nice touch. So, what we want to look at is, let's see, potentially just areas where it's going to reject. Areas where I want to see a continuation. That's obviously already passed, so we'll probably look for no real solid zones. Maybe here. Yeah, maybe something like yeah, I like that. So maybe potential break and retest there, right? But again, it'll just be a paper trade. US 30. US 30, you can see it took this nice region here. Very nice support region here. Broken this out as well. I think the next clear example would be a retracement here and to the upside. So if it does come back through here, I'll place a stop here. Again, will be a paper trade, and then we'll see how this turns out. So I'll pop a little alert here, see how that goes. But yeah, we'll be just trading oil properly for this week. Yeah, oil will be the main trade. Oil will be the main trade. Clean this up a bit. So yeah, let's have a look, see if we can get another trade in there. Currently we will be floating up 1.6 RR. So yeah, if it does take me out, I'll still be net 0.6% up for the month. But yeah, let's have a look, see how this goes. See you guys.